was unbanked. That loosely translated to about 2 billion people at the time. Closer home in the sub-Saharan Africa, 17% of the population, or 350 million people, did not have access to a bank account. That's by that time. So how is that happening? Why does that happen? Joining me now to dot the I's and cross the T's on the banking sector is a career banker. Born in Zimbabwe, was head of retail banking with Stanbic in Zimbabwe, crossed over to Standard Chartered as a director in South Africa, then came back to Stanbic as CEO, but now in Lusaka, Zambia. 4 years later, he is the CEO of Stanbic in Kenya. Mr. Charles Mudiwa, thank you so much for joining us today on Business Today.
Thank you.
Owing to your illustrious banking experience across different countries, how do you compare the banking experience in those countries and Kenya?
I think every country has its own unique experiences, and I mean, they're all fascinating in their own way. I mean, if you look at Southern Africa, I think, which is where I worked in my earlier career, the banking experience there has been to try and improve access to banking, and largely was done by using accounts. So when we were in South Africa, for example, we launched a product called Mzansi, which at that time in 2004, 2005, was the fastest growing account in terms of providing access. And at that point in time, South Africa, when we started that journey, financial inclusion was at 46%. By the time we finished there, it was at 60%. I think now it's hovering around 80, 90%. So that was through opening an account, which was a collaborative process around all the banks and the big four banks anyway, and the post office, and we opened this account and successfully managed to improve financial inclusion. Move forward to Kenya. I think financial inclusion in Kenya has been driven largely by digital platforms, particularly through the telco industry. And M-Pesa, of course, is most notable among these. So the journeys have been different. That in South Africa, it has been largely been bank-driven. In Zimbabwe, I think we've seen a combination of bank-driven and then, of course, also mobile telcos through EcoCash and other modalities. In Zambia, it's also largely been bank-driven. There isn't much mobile. It's coming up now. Malawi has also been largely bank-driven. So if you look at the modalities that has happened in each of these regions, you find a combination of telcos, fintechs, and banks coming together to deal with financial inclusion.
Fair enough. So that said, about 350 million people are unbanked. That's according to that report of the Global Finance Index by the World Bank. That was in 2015. So in Sub-Sahara, about 350 million people. It could be more, it could be less by this time. But how do you explain that phenomenon?
Well, I mean, I think when we talk about, I think there's a distinction when you talk about being unbanked and being financially included. Okay. Because there is a piece around having a bank account, which I think probably what we're talking about. And then there's also a piece about being financially included. In other words, do you have access to financial services and products? And I think the journey that we have to move is that while a lot of people, if you look at here, most people have got access to some form of a financial product, which could either be a chama, because that's a financial product, or it could either be one of the mobile payments that you have on your phone, that's a financial product. But you may not necessarily have a banking account. And I think the question we now need to ask is that when we think about financial inclusion, what are we really defining? And ultimately, it's about you being able to participate and engage in financial transactions, irrespective of the modality of it, whether it's through a bank or through a fintech or other modality. Because ultimately, what we want to do is to bring as many people into the financial market and to perform financial transactions as much as possible. Essentially, we want to move people away from keeping money under their mattresses and other places and move them into some financial system. That will make our monetary policy more effective, and that will make even our economic development even more effective, and we don't have money that's sitting outside the financial services system.
That said, though, we are coming from a difficult year where banks and most financial institutions perform dismally, recording quite dismal, numbers in terms of performance. How did Stanbic survive?
I think I would like to say that while, yes, banks have not recorded as much as they did in the previous years, I think what is more important is to say that banks have been generally resilient. So if you look at the financial markets in Kenya across the board, I can say the industry has demonstrated strong resilience, and we've seen them pulling through. And I think what is important is to look at balance sheet numbers rather than profit numbers. So if you look at the balance sheet of banks, almost all the banks in Kenya are well capitalized. So that gives you confidence that the market is strong. We also see that a lot of them, almost all of them, have got good liquidity ratios. In other words, they're not just well capitalized, but they're also well funded. So they're able to support their customers and also have a very strong balance sheet. So the ratios demonstrate good capitalization, good liquidity ratios, and therefore, and also have even shown some growth in the balance sheet. Loans have grown during this period, even though it's not as much as we would have liked, but even deposits have also grown. So we've seen growth in balance sheet, we've seen strong capitalization, we've also seen strong liquidity positions. So notwithstanding the reduction in profits, but we've seen that the financial sector is still very solid and sound, and is still very much on a sound footing.
I'd want to pick your mind just briefly before we go to this next story and resume the discussion after the break. What is the report on non-performing loans at Stanbic, and then what is the plan around it to sustain the balance sheet, as you say?
Yeah, we did see an elevation of our NPLs, like everybody's industry. I mean, of course, we're in closed period now, so I'm not at liberty to say what the numbers are. But what we did see is that we did see an elevation of NPLs, just like all other banks, and this is a direct consequence of the impact of COVID. But having said that, we also need to highlight that while they're elevated, we still saw resilience in the balance sheet, we see resilience in the liquidity, and we even saw some growth in our deposit base. So if you look at what we showed, the last report we did in September, we were showing a growth in our assets, and we're also showing a growth in our liabilities, which is our deposits, by almost an effect of above 20%. So that shows you the resilience and the strength that the balance sheet has. And I think it's reflective of the industry as a whole, of how we've seen them performing.
Thank you so much. We have been speaking to Mr. Charles Mudiwa, who is the CEO of Stanbic Bank here in Kenya. That is part one of the discussion. We are resuming with it after the short break. But before we take the break, let's now take another story. The National Development Implementation Communication Cabinet Committee conducted a tour Kenya's electricity transmission hub, Suswa Substation Complex, which hosts the largest converter in Africa. The project's inspections tour was intended to acquaint the Cabinet Committee on major milestones undertaken by government in the energy sector. The visit by the Cabinet Committee unearthed massive progress of major electricity transmission projects being undertaken to ensure availability of efficient, reliable and available electricity supply to the country and the region pursuant to the Big Four agenda. Suswa Substation, a grand transmission plant owned and managed by the electricity transmission giant Kenya Electricity Transmission Company, KETRACO, is the most significant electricity connection point in Kenya and a key interconnection point within the region. Exciting news there on the energy sector. And on that note, we are due for our break. When we come back, we'll be talking about the state of the banking industry much more, and we'll try and get the analysis on the Financial Standard to show you some of the stories that have been given prominence in that weekly pullout. You're watching Business Today. Do stay with us.